Hi, I'm Michael Gable, Managing Director at Fairmont Equities. Share markets have had a great start to the year, so naturally investors are wondering, is now the time to start taking profits off the table, especially when they think about the old adage, sell in May and go away. Well, share markets have retreated about 5% from their recent peaks, and all those bearish commentators from last year are turning up again. Those who were expecting a share market crash and a housing crash last year are saying that we need to be in cash. Well, is this correct? So far the rally has been very sustainable. I've been very impressed with the reasons why the share market has been going up. It's been heading up because global growth has been strong, earnings have been quite robust for companies. It hasn't actually been going up because everyone's expecting an interest rate cut. If anything, the expectations of an interest rate cut have been heading the opposite direction so far this year. So, do we need to sell now, or is there actually some further upside from here? I have one chart that is very revealing. Just a reminder, any advice here is general only. So this is the one chart. We've looked at this before. My business is known for looking at both stock fundamentals and technicals, but we do a lot of work on the macro as well. I mean, one of the best indicators, as I've mentioned before, in the global business cycle is the US Institute of Supply Management Purchasing Managers Index. Global stock market returns are highly correlated to the business cycle. And as we can see on this chart with the blue line, the PMI is heading up from a trough. And as we could see with the red line in terms of share market performance, this corresponds to the strongest performances on the S&P 500. So we don't want to see a high PMI that's potentially falling. We want to see the low PMI that is heading back up. And this is what we have now. And this means we are entering a new multi-year rally in stocks. So at the moment we are getting a bit of a short-term cooling off. That's natural. I don't expect the market to pull back deeply from here. What I've been noticing in terms of stock trading in the US, there has been a bit of selling in the tech stocks, but there's also, which is quite revealing, buying of lower valued, undervalued stocks in the US, and that's keeping the market supported. So I'm expecting at worst a sideways consolidation here in the share market. Bit of rotation, and then once that's underway, we can resume that uptrend. I've been bullish commodities for a long time. They're really moving this year. Copper, gold, oil, uranium, they're all doing the right things. I expect that to continue, but clearly the easy money from the first few months has been made. It will get a bit more difficult this year. You need to be a bit more nimble, but there will be opportunities if you know where to look. If you're looking for more information, head to fairmontequities.com and sign up for our free trial. You'll receive our trading guide on how I buy and sell shares, and you'll also get 8 weeks of our research delivered to your inbox. But at the end of the day, if you qualify for our portfolio management service and you want my personal help with managing your share portfolio, please give me a call and we can talk about it further.